Alright, so I just started the recording here. We're about to have a webinar on the 9 system portfolio. We're going to go over these things. We're going to look at all 9 trading systems in the portfolio. You can see that in my screen behind me. You've got 9 trading systems we're going to take a look at. We're going to talk about how to trade multiple systems in the same account at the same time. We're going to look at some of the automation settings. And then we're going to go over how to build and analyze a portfolio using our portfolio calculator in Excel. And so with that, we're going to begin. We're going to take a look at each of these strategies. What I want you to see here, I'm going to grab this pen. I'm not that great at drawing with these pens yet, but I'm going to make an attempt here. I'm going to choose the green pen. All right, these first 4 in this box right here, and you've got 9 systems in here. These are the E-mini S&P systems. These are the Euro currency systems. These are the crude oil systems. And this is the soybean systems right here. You can see them all in one workspace. The note about these systems are, I'm not a high-frequency trader. I look at, I guess you could consider what I do as a long-term day trader. So I look for long-term day trades and try to maximize average trade profit instead of competing with the high-frequency traders. I prefer to be selective and get as much out of the trade as possible. So you see the first window is Cobra III. And this is a trend strategy. I'm going to put T for trend. And you've also got a tick count trend, which is a counter trend strategy. So you've got, I'm sorry, that's a trend strategy. Tick count trend is a trend strategy. So your 2 E-mini S&P trend strategies are on the top. Your counter trend strategy, Cobra CT5B and SR counter trend are the 2 ES counter trend strategies. Then over here you've got Euro Surge, which is a trend strategy for the Euro, and the Gap Fill, which is a counter trend strategy for the Euro. And then you've got Cobra Crude, which is a trend strategy for crude, and then SR counter trend crude. And that T over there keeps disappearing. Not sure why. Trend and counter trends. You get trend and counter trend for crude, 2 trend and 2 counter trend strategies for the E-mini S&P, a trend and a counter trend strategy for the Euro, and then just a trend strategy for soybeans. And so I'm going to take a look at the performance for each of these. So you can go over here and look at Cobra III. I've got these going back 3 years to save time and memory on loading these charts. But the entire performance summary, I'm going to show you how to get that at the end. This is Cobra III E-mini S&P going back 3 years. You see the results. Here's the equity curve. 194 trades. This is inclusive of slippage and commission. So if you've got, we include $25 round turn slippage and commission. In my own trading this year, I'm averaging about $20 round turn slippage, and so you add another $5 for commission. And so this is inclusive. Without that, that number is about 71. And so these are good numbers for day trade systems in the E-mini S&P. I'm not sure what your experience is with day trading, but over 50 before slippage and commission, and then over 25 after slippage and commission are good numbers and targets to shoot for. Tick count trend, it's been a little bit low. As you see this in recent trade from this point forward, it's had higher numbers, and if you go back further, it has a higher number than that. But it's a more high frequency strategy, but it's still low frequency. It's only 2 trades so far, only 9 trades so far this year, and so it trades more frequently than the others. You can see 843 trades. Take a look at recent trades on these trend strategies. This year in the E-mini S&P, there hasn't been that much of a day trade trend. The long-term trend has been up, but the day trade trend has been a bit choppy. And you see some of the days that we did trend, our selective Cobra III strategy has had some nice short trades. Tick count trend the same way. It hasn't traded as much this year, but you see some of the trades it's taken. It had 3 winners right here, and then you had 2 losers on the long side. And you got our tick count trend indicator at the bottom, where when blue leads, it's bullish, and when red leads, it's bearish. But so far this year, blue or reds have not led that much, and that's why I say there hasn't been much of a day trade trend, because the neutral ticks represented by white is what has led mostly this year. And so the trend strategies, I'm telling you this because the trend strategies have just not traded much, and so that's a good thing. When the day trade trend is not there, we want to be trading counter trend, and that's what's been trading more frequently. So we're going to take a look at our 2 E-mini S&P counter trend strategies right now. And this is Cobra CT5B. It has had a losing trade and then a winning trade. And then here's some of the recent trades. You see it gets on a roll sometimes. The thing I like about this strategy is it has a monthly stop loss of $500. It's long only. So there's times when the market just goes straight down and you don't want to keep buying it. So when you're biased to one side or the other, you kind of need a stop loss. And so if at the end of any given trade, if you're down by $500 on the month, then you just stop trading this system. It's got a built-in risk parameter. Right here at the bottom is the day trade profit and loss. Green means profitable. Red means it's a losing day. And so you see our last trade was a losing day on Cobra CT5B, and it hadn't traded in a while. Again, these are selective trading systems, and we're focused on the overall results versus taking trades every day. SR counter trend, the last trade was a loser. You see this right there, and then first day of March we had a really nice day. We went long and then we went short and then we got out right at that point. And so we don't get many zigzag days like that. The reason this exited, it exited at the previous day's low. It exits short trades 1 tick above the previous day's low, and it exits long trades. If it doesn't reverse, it exits long trades 1 tick below the previous day's high. So it says it may or may not penetrate that lower high. We're going to get out before 1 tick before. And so you see some recent trades, a short trade there. These 2 long trades got out because they're at the previous day's high. Short trade here. It's been tough to short this market. And overall, the stock indexes have underperformed so far this year, in which I believe is a good time to get in, because I think that the cyclical nature of range and trend kick in, and so still SR counter trend's been pretty good. And those are the E-mini S&P systems in the 9 system portfolio. We're going to look at the Euro currency systems, and these 2 systems are probably the best systems to trade out of this portfolio overall. If I'm going to trade 2 systems, I'm going to trade Euro Surge and SR counter trend. And then Euro Gap Fade is also a really good strategy that had a great month last month. And these 2 systems were responsible for most of the profits from last month. Going over the last 3 years, these are inclusive of slippage and commission. We didn't take a look at the performance summary for Cobra CT5B yet, so I'm going to go back and look at that. Here's the equity curve and performance. Again, I have a download link for this at the end, so you can get all these performance summaries. Here's SR counter trend. Again, these are really high average trade profits for day trade systems. I've been developing for a long time, and if you take out $25 slippage and commission and you still get these kind of numbers over 50, you're doing really good. And so these are the last 3 years. This only goes back 2 years, even though we have the data going back 3 years, because it takes about a year of data to take a look at for the strategy to start generating trades. And so here's the equity curve. You see SR counter trend is at peaks. And you have a diversity of strategies at peaks and at pullbacks. And so this is a little bit of a pullback. And then Cobra III is at a peak, and SR counter trend is at a peak, while tick count trend and Cobra CT5B are a little bit of a pullback. And so you get diversity there on the equity curves too. And so now on to euro currency. I had to step back there because we didn't look at the equity curves on all the E-mini S&P systems. And so looking at euro surge, nice equity curve. And again, I want to emphasize the long-term nature of trading and trading systems. So over the last 3 years, and these are really good results, and this is a strategy I've had a long time. High average trade profit, pretty low drawdown. A lot of people can't handle that kind of drawdown, even though it's low for a system. Most systems eventually have a $5,000 drawdown to $7,000 drawdown. If you go back further, you get a bigger drawdown on this system. But for example, you get a lot of traders, retail traders. They want to sign up and they lease a strategy and they get in here. And this happened. They get in on euro surge, and then it doesn't make an equity peak, and so they stop trading it in this time frame, and a lot of them get out right about this point. The last one gets out, and then that's going to get out, and then the market goes, not the market, but the strategy comes back up here and makes a new equity peak. And so you have to have a long-term picture. For example, in this time frame, it made an equity peak on December the 13th, 2010, and it didn't make another one until November the 9th, 2011. So this is 11 months between equity peaks, but it's still really good results, and that's just the long-term nature of trading systems. And so that's euro surge. That's the trend strategy for euro currency. And taking a look at euro gap, this is a gap fill strategy based on the custom session, and it's got really good results as well. This is $81 average trade profit, low drawdown, nice equity curve, and this is, you can kind of get the feel for this strategy from our book 7 trading systems for the E-mini S&P, or for the S&P futures. Here's some of the recent trades, and this has had euro surge and euro gap fill have had great months. Last month it's down this month, but last month it made 1387.50. January's up 975, and then the some of the most recent trades, we had a stop loss there, small profit there, and another stop loss today. So it's a cyclical nature. And then on the year for euro surge, 1337.50 last month, and so the 2 euro systems did really well last month and are responsible for most of the profits last month. Now we're going to take a look at crude oil, Cobra Crude Oil. It had a small gain today, about 2 ticks. The market rallied, it pulled back. We get in on the pullback, and then it dips, but then it never follows through on that trend. But this is a strategy that it looks a bit choppy with slippage and commission, but it really helps our strategy. We did a webinar a while back. Excuse me, I'm going to get some water here. We did a webinar a while back on ugly equity curves, and I'm going to refer you to that as well at the end. And so real trading systems with real slippage and commission are going to be choppy, and so the best way, one of the best ways to get a straight equity curve, one of the best ways to get an equity curve that looks like this is to combine systems. And so combining systems you'll never get a straight equity curve without a drawdown. You're still going to get some choppiness, but combining systems will reduce the number of swings. And so that's the choppy nature of Cobra Crude Oil. If you go back further, this looks better, but it's only $42.96 average trade profit after $25 slippage and commission. I've been getting good fills on this system, and I'm going to show you how to set up automation as well a little bit later. SR counter trend. Here's a strategy. It's had some nice short trades back here. Nice short trade, nice short trade. It got stopped out and then got back in for a little bit of a gain on the day. And then there was 2 days ago, there was some short trades. We got out on a break-even stop, and then got out. It wouldn't go down. So Here are the results over the last 3 years. Choppy equity curve, but up. Looks like a better equity curve when you go back further as well. And so pretty low drawdown for crude oil. Most trading systems in crude oil, and it'll have a bigger drawdown in Cobra crude oil than this when you go back further. But you need to allow for about $10,000 drawdowns in crude oil from what I've been able to find in my trading system development of crude oil trading systems. So that's crude oil, trend and counter trend. And then soybeans day trade 2. This hasn't traded in a while, but here's the equity curve, here's the pullback, and here's the next move up. And so it has some good trades when it trades. It does have some drawdowns. Soybeans is pretty volatile. Still a good average trade profit. And you combine all these equity curves together, it's a very diverse portfolio. So one of the questions I have is I get a lot is how can you trade a long and short signal in the same account in the same market? And so we're going to take a look at an example of that. This example happened on February the 27th in crude oil. What day is that? February 27th. It trades Cobra crude trades 1-minute charts, and then SR counter trend trades 5-minute charts. And so we're going to go over here to February the 27th. You've got a long trade in Cobra crude and a short trade in SR counter trend. So what happens is in this situation you have one account, and so you're going, this trade goes short at 10:20 a.m. Eastern Standard Time at 92.83, and then at 10:41 this system goes long at 92.73. So 20 minutes later you're going long at 92.73. So what does your account look like in this situation? So basically what happens is these are signals. So every time there's a sell signal, that goes to your account, and every time there's a buy signal, that goes to your account. And so if you're trading this, I'm going to pull up another chart. So we're going to pull up a crude oil chart here to represent these signals, so you can get an idea of what happens on a very simple basis, trading one contract to two different systems going in different directions. And so what happens here is at 10:21 you're going to go short. Right about here he goes short. That's just a line. I need not a line. Where's the pen at? I'm going to pull out the other pen here. Hang on a second. Alright, so at 10:21 he goes short right there. 92.83. And then that's the signal right here. Next, so number one. So number two, you go long at 92.73. So that's about right in here. See, you're plus 10 or $100 per contract. And then so you're flat. Your actual position now is flat. So one system is short and one system is long. This keeps erasing. I'm not sure why. This is the first signal. This is the second signal. So you're one signal short, one signal's long, but overall you're flat. And then over here, SR counter trend gets stopped out and then gets back in. So we're just going to say that was a quick long and short trade, and then so you're still flat. It did a buy and then a sell again, so you're still flat. And then coming in at the end of the day, this strategy exits I'm going to get the normal drawing tool here. And this strategy then exits at 92.80. So you sell one at 92.80 at 14:30 Eastern Time, and then you come over here and you buy one to cover your short position at 3:15 p.m. It's at the open of that bar, so it's really 3:10 p.m. So 40 minutes later, you buy it back at 92.82, and so this one sells at 92.80. 40 minutes later, you buy it back at 92.82. So you're plus 10 on the first trade. You go short and then long for plus 10, and then you exit this one. This is trade number 3. You sell it, so then you're going short at the 92.80 area. What time? Right in here. The price is different now because of the rollover. I think that's what's going on. So you go short here, and then let's say short here, and then long there for -2. So in reality, you have 2 trades, not counting this buy sell, where you go short here, long there, and then you're flat, and then you go short here, and then long there. So you basically had 2 short trades, one for plus 10 and another one for -2. And so that's what happens in the real world. The signals in real life, this cancels each other out. And so I have some people that argue that they don't understand how you can have 2 systems taking opposite directions and still get the same results of your systems. But you have to, if you take all the signals that are on the systems, when one is long and one is short, they cancel each other out in the real world, and whatever you lose on the short trade, you make on the long trade, and then you don't have another signal. You don't have another position until one of those signals exits. And so you could do this with multiple systems. So you could have 10 systems for the E-mini S&P with 4 long and 3 short, and then 3 are flat, and your total position is +1. So 4 systems are long, 3 systems are short, and 3 are flat. Now, if the 4 systems are long and it's a big trend day and these 3 systems get stopped out, and you'll end up buying 3 when those get stopped out or exited. So then all of a sudden you'll be +4. So you'll be long 4. This keeps disappearing on you. I'm not sure why. 4 long and then 6 flat. Anyways, you can let me know if you have any more questions on that. But I wanted to go over that, how you trade multiple systems, how they cancel each other out, and how that happens in the real world. And so, having said that, I want to go over the automation settings, and then once we do that, we're going to take a look at the portfolio calculator. So we're gonna take a look. I'll show you what we're working towards is the calculator. This is what I sent out in the email. This is the combination of all the data I've combined in here in the drawdowns, and so we're going to take a look at that at the end here. But at first, we're going to take a look at the automation settings. So I'm going to put these workspace windows back. And you can choose to put all of these windows in one workspace. You can have them in separate workspaces. Depends on how you like to look at them. And so, for example, how do you set up the automation? One secret today was rollover in the E-mini S&P. So how do you know which symbol to trade? And you see here at the top of each window what the front month is. Let me get the pen out again. I'm not fast with this pen. I have to select it each time. So right here is the Contractor Trading. And you look at the @ES symbol, @ES.D, or the @EC, or the @CL, or the @S. And when you do that, you can see which contract to trade. Right now it's June. Yesterday it was March, and it just rolled over. And so you see in soybeans, it's May. And so you're going to use the symbol K, @SK13. For crude oil, it's April. So you got @CL J13, where CL is the symbol, and then J is the month code, and then 13 is the year. And so that's one of the tricks to knowing which the front month to trade is to look at the @ES.D or the @CL, the @S, or the @EC, and then it'll tell you up here at the top in this blue bar up here what contract month to trade. So March is still the euro. That should roll over here pretty soon. They normally roll over around the same time. Another thing you do is look at volume, and so when you automate this, you'll want to set the symbol to M is June, and you can use @ES or ES. I prefer to use the symbol so it'll get past data if I need to look back further. @ES M13.D. So I just changed the front month, and PD means pending data. It's loading that data. I haven't loaded, since today's a rollover, I haven't loaded 3 years worth of @ES M13.D yet. And so you can go to your download scheduler, and you want that to say ASAP. I do it ASAP. And then you'll let that load. And then how do you set up automation? SA, you can go Format Strategy, and then you want to click on Properties for All. And so when you look at the Properties for All, you see I put in $25 a commission. That's just to say $25 round turn slippage and commission. So I take out 25. I just make it simple. I put $12.50 right there. It takes out $25 per round turn. And then you click on this Automation tab. And the first one of the things I recommend is to cancel and replace your limit orders to the market. And even doing this, average $20 round turn slippage. That's what I'm averaging. So $25 round turn slippage and commission covers it. It's a good estimate. And even if you're a few over, you're still doing good, and you still have a lot of average trade profit. We're not high frequency traders, so we have a little room here. This is an average over time. So you're going to get periods where this might be higher. You might get 37.50 slippage on one round turn trade per contract. You might get 2 ticks slippage on the entry and 1 tick on the exit, and you might get 37.50 sometimes. Then other trades you get 0 slippage, and then sometimes you get negative slippage. I've had that where I get stop orders. The market hits my stop, it goes down, here's the stop order, it hits the stop, and then it bounces up real quick and gets out at a tick higher than my stop, and so I get negative slippage. But these two are what I do. I replace the strategy limit orders with market orders right there, and then I use 3 seconds. Jury's still out on this number. There's no way to optimize this, but I use 3, and I'm thinking that a shorter time frame might be a little bit better. Maybe 1 second or 0. I haven't tried 0 seconds where it immediately just sends the signal to a market. 0 or 1, or even a longer term time frame like 5 to 15, but I wouldn't recommend going over 5 to 15. My theory now, after looking at this a little bit longer, is that a shorter period than 3 seconds might actually be better, and then it might actually depend on the market. This, you have to have it checked if you're going to automate more than one symbol, more than one of the same. If you have two E-mini S&P systems or two crude oil systems, you have to have this checker. It's going to give you an error. So make sure you just check these three and then put in a number here between 1 and 3 seconds is what I recommend for automation settings. So that covers how to set up automation. So I got some questions. I'm going to see what questions I have here. Yeah, I'm looking at your questions, Don, and you're talking about waiting for a drawdown before trading. That is a good plan. It's hard to time a system. So, say for example, the Euro surge. It's a tricky deal if you wait for a drawdown to get in. So on a single system, yeah, you can get in there, or you can look at the drawdown of the portfolio to start. But to get in and out, once you're in, trying to trade in and out of the trying to get out on a run up and get back in on a drawdown is very tricky. But yeah, if you wait for a drawdown on a single system or a portfolio, then that's the best thing. Now here's where it gets tricky. Let's take a look at our 4 E-mini S&P systems. That's a good question, Don, because I think about this all the time, and it's part of the money management algorithms. That history disappeared on us. Sometimes when you reload the data, like I changed the symbol and it reloaded the data, and so you have to turn the status back off and back on to get the to get the data up. So you see Cobra III is at an equity peak, and you see it's run up here, tick count trend, but it's still in a drawdown from its highest peak. And then SR counter trend is near an equity peak. It has a little bit of a drawdown, and then Cobra CT5B has a drawdown. And so these two systems are in a drawdown, and these two systems are kind of in a run up, kind of near equity peaks. And so what happens is if you plan on trading the whole portfolio, and you only start trading the systems that are in a drawdown, you end up losing your diversity. So you don't want to lose your diversity by just selecting the systems. If your intention is to trade the portfolio, if you just trade the systems in the drawdown and you just trade, for example, in this case, it might be okay because the trend system and a counter trend system are in a run up, while another counter trend and trend system are in a drawdown. So you would still, if you just traded Cobra CT5B and tick count trend, you would still have a trend and a counter trend system. But you would lose your diversity if you stopped trading the Euro systems, because they both did well last month. They both made equity peaks or near equity peaks, and so it's tricky. So the best thing to do can be to wait for a drawdown, and we'll look at that in the portfolio calculator next. So you can track the drawdowns, but it's very, very tricky, and you have to make sure you don't lose your diversity if you do that. So that if you're trading, for example, two trend systems and two counter trend systems, and the market goes through a counter trending time period, I'll try to draw this out. See if I can explain this with my pen. So say this strategy is in an uptrend, this strategy is an uptrend, and this one is in a drawdown. So you're in a drawdown here. These two counter trend systems are in a drawdown, and the market has been in a strong trend. Overall, the market has been in a strong trend, and so that's why these two systems are doing well, and these two systems are in a drawdown. So oftentimes the market is cyclical, and so you can select these two systems now to start trading them, and the cyclical nature of the drawdown might say Okay, now we've gone through a trending period. Now we're going to go through a counter trending period. And so now these two systems start going up. And so maybe your call was right, but your timing would have to be perfect in that scenario, because if the market instead kept trending higher, these two systems could continue on in their drawdown. And so you're continuing on in your drawdown while these two systems continue in their run-up. And so you miss this run-up and you catch this drawdown, and so you lose your diversity. And so timing it perfectly is almost impossible. So you want to, if you're going to trade the drawdown, you want to look at the portfolio as a whole, and then get in on the drawdown of the portfolio as a whole, or add to positions on a drawdown as a whole. And so good question, Don. And so that's what your other question is. Look at the combined stats so that each one individually system stands alone. Yeah, I mean, I basically was mentioning that in both the answer to both of those questions. But if you have any more questions on that, let me know. The key thing to remember is not to lose your diversity. So those are the automation settings. Are there any question on the automation settings? All right, we've gone over the 9 trading systems. We've gone over how to trade multiple systems, the automation setup, and some scenarios where one system's long and one system's short. Now we're going to go over the portfolio calculator, and that is an Excel file that I build. You see the output indicators. I like these down here at the bottom because it has the name of the system. Without these, it's hard to tell which system's which. But it also writes to a text file each day, the daily profit and loss at the close of the day. And then I have this these macros. I open up all my workspaces, and then once I go through the process of opening up all my workspaces and writing all these text files out, I then come back here to my portfolio calculator, and I load them all in. I have macros. This one doesn't have macros. This is the one on the website, and I deleted the macros because they're text files on my computer, and the directory on your computer would be different. Even if you set this up, it would be more complicated. It's possible to set this up on your end. It's going to take a little bit of time. I might come up with a better process for that if you're interested, so that it'll be easier for you to do and implement on your end. But there's some hidden worksheets at the bottom. You have to be pretty good at Excel to do this. So I've just compiled the results and put them on the web, and these include all my systems. And so each time, this is the number of contracts for each system. So you can play with this by adding numbers of contracts to each trading system, and to see how it updates up here at the top. And what we do is we focus on, this is equity curve analysis. This is not individual trade analysis. There's lots of portfolio tools out there, but this is the one I really like to use. And when I just look at the equity, it doesn't include, say, average trade profit. I have to look at average trade profit separately within each performance report, or combine those results manually. But this is a quick way to do it, because a lot of the portfolio tools is once you add or take away systems, then you have to wait for a long time for them to process. Well, this, you could quickly add these systems. So watch when I add this one. See these numbers change? This is the number I look at. The numbers I look at most on this are the total profit and drawdown. This is the current drawdown, the max drawdown, and the current drawdown. So right now it's in a $1,000 drawdown, even though this is as of yesterday, and today it had another losing day. Let's go back and look at today's results for reference into this, because I haven't put today's results in. I haven't had a chance to do that yet. But you see, Euro Gap, there were 2 trades today. It's not exciting. It doesn't trade a lot. It's a selective portfolio. None of the ES systems even traded today. We had a narrow range of 4.5, almost like 5 points. Not even 5 points. It's extremely low. But Euro Gap got stopped out for 500 today, and Cobra Crude only made about 20 or made $5 after slippage and commission. You see that number there? It made $30, and then we take out 25 for slippage and commission, so it only made 5. We had $25 slippage and commission for Euro Gap, so it lost minus 525. So we're down 530 on the day. And so, looking at this portfolio again, the current drawdown is now so after today's results, that would be minus 1565. And then another number you can look at is the risk to drawdown. So the risk to drawdown would be $6,500. I've added the system. Where did I add it? Gap fill rank. Gap fill rank is not part of this portfolio. If you add that, that decreases this number here. You want to see how adding systems affects this number, how it affects the number of losing months. This is the account size required. It adds the margin to the drawdown, and you can change your margins right here. Different people have different margins. I haven't updated these in a while, so they've gotten a little bit lower than they were. Gold is lower. I think that's the right number for crude oil. These are aggressive margins right here, so you can copy and paste those in there. These are the day trade margins for Tradestation. These are some brokers allow for really aggressive margins. So if you put that number in here, your total account size required goes way down. So let's try that for a second. I'm not sure that everyone executes at Tradestation. I'm going to copy and paste these. Copy this number, put it there. I'm going to copy this number. If you had lower margins, your account size would be much lower. But that's aggressive. I don't always recommend being that aggressive. I believe in being well capitalized, because even with those margins, you're still using a lot of leverage. Even with the minimum margin, you're still using a lot of leverage. You have to look at these numbers. The largest losing day, $2,500. The largest winning day, $79.30. Is back in 2000. I think both those numbers were back in 2008. I can unhide some of the tabs and show you that. I forgot which one that is. I think sheet 3. No. Sheet 2. Yeah, here is the sheet that shows the largest losing and winning days, and you can see that was the largest winning day. It occurred 11/10/2008. The largest losing day is 2375. That's 2,500. So that's in 2011. So you have to be prepared for those. You have to be prepared for these worst case drawdowns. You have to be prepared for these worst losing days. This is the average annual profit and the total profit. This is the total profit since the beginning of this. We have the data in here since the beginning of 2005, but we only look at the average. We're only looking at the average annual profit since 2007. Why just 2007? It's higher if we do it since 2007. But the reason we do that is because not all of these markets had full years of day trade. There was a transition from the pit session, and then they started on the day session. Some of these markets traded electronically at night, but they didn't trade during the day electronically until these start dates. And so 2007 is the first year where all these markets, well, coffee didn't start till later, but coffee's not part of this portfolio. And so 2007, soybeans, for example, started August 2006. Crude started September 2006, gold December 2006, and so that 2007 is the first year where all these systems have a full year of data. And so let's see, how does that look on the drawdown chart? Drawdown chart analysis is another one that I like to look at. So right there, you can highlight these dates on here too. If you click on this Excel spreadsheet, it says 12/4/2006. And so that's January 29th, 2007. So it's January 1 is somewhere between here and here. So Don, these trade during these are all day trade system, but Euro the Euro currency systems start trading at 2 a.m. So you don't hold any positions overnight, but at 2 a.m. Eastern Standard Time you can start taking trades in the Euro gap, in the Euro surge, and then these other strategies overall, they'll all take trades. The crude oil and the soybeans and the E-mini S&P strategies will only be around E-mini S&P systems 9:30 Eastern Time. In their day trade, they get out by the end of the day. Start of the crude is around 8 a.m. Eastern Standard Time, and so soybeans is 9:30 Eastern Standard Time. And so they're all day trades. They don't hold positions past the end of the day, but they can start. Euro can start as early as 2 a.m. So yes, automation. I set on automation, and I go to bed, and so it works. It works great in Tradestation. I've got a great internet connection, as well as a backup internet connection. But I haven't. The internet connection I've had now is really good. I've not had any outages since I've had my current internet connection, and so it's works out really well. Automation at night. You can also use a VPS if you want, a virtual private server. They have backup internet connections. There's the beginning of 2007. So you see this drawdown curve. Here's the worst case since then. Here's the worst case overall. You had these 2 points here. These 2 points here. What's the length? This is the longest length of drawdown from equity peak to equity peak. And it's right there to right there. And that's about 4 months. I went and looked at that earlier, and that's 2011. I believe that's June 2011 till November 2011, sometime in that time frame. And so you have to be long-term. Again, this is about the long-term nature of trading. All these systems start trading for all markets start right here, and so nice move up, and then it's kind of looks flat here, and then it's moved up a little bit. Starting to move up a little bit again. Here's the drawdown curve. You can see where that ends right there. That's our $1,000 drawdown, and after today it'd be in this area. If you updated it, it'd be in the 1560 area. And so if you wait for too big of a drawdown, it won't happen that frequently. So if you look at this line right here, that's a point where it's fairly frequent, but past that it's not that frequent. And so $1,000 and $2,000 drawdowns happen fairly frequently, 1,000 very frequently, and the bigger the drawdown, the less frequently. So you could conceivably wait a month or two during some of these time periods. If you're waiting for a $2,000 drawdown, you might wait 6 months, and you miss a run up. So that's what's another hard thing about waiting for a drawdown, is it might take a while. That's the analysis of the equity curve, drawdown curve, as far as the depth of the curve. And again, this is historical, hypothetical. It's had some walk forward analysis, and these systems have been around, but the combination of these systems has not been around forever. So this is some based on research since the end of last year, November of last year, about combining these strategies. Six losing months. since, and that's since 2008. The number of losing months, I don't know, I have it there, just 2008. I could change that real quick. But in 2007 you had one losing month, and so if you included 2007 there'd be 7 losing months. And so I think all this makes pretty good sense. Again, you could test other strategies. What would it be like if I added, say, some of the SR counter trend strategies, like the Swiss franc? Watch these numbers change up here while I add this here. You want to watch this number change while I add this. Well, it improves it a little bit. You went from 55.62 return over drawdown to 58.62 return over drawdown. You improve your average annual profit a little bit. One of the things I struggle with is you can't always improve this number. You can't get to the point of diminishing. I mean, it gets to the point where you can add more systems and this number might go down just to add more systems and diversity. You can't always increase that number every time you add a system or make that expectation. You might want to add more markets. Say, what if I want to add the Canadian dollar, SR counter trend Canadian dollar? It goes down again. What if I add the Japanese yen? It goes down again. But my average annual profit goes up. And maybe you're comfortable with that drawdown. Maybe that drawdown's not bad. Maybe you want more money. Maybe you want to take on more risk to try to achieve more annual profit and get more markets. You get a tighter equity curve when you add. You get more frequent equity peaks a lot. DAX Night Trader is another really good one that's doing well. It's really volatile though, so it can increase the drawdown a little bit, but your total profit over drawdown went back up. See what happened when we had it taken out? It's 49.55, and then when you added it, it went back up. And I've converted the results to US dollars from euros. I've also got these over here for the money management algorithms that I use. The money management algorithm version, I haven't completed all the research on all these, but these are some of the ones I use for the money management algorithm versions. Here's another good strategy that I like, Cobra CT80 ER long. It improves that number, 57.54. You can take out these two. 62.28, you're climbing. The short version goes down a little bit. Cobra CT80 ER long is included in the money management algorithms. 64.37, your number of losing months goes down. It's just kind of a process of looking at the type of systems you're getting, trying to find a balance of trend and counter trend, just playing with this tool and seeing how these numbers update. So any more questions? We've gone almost an hour. I've talked a long time. I know it's a lot of information. I want to show you a my website. I've added it to this. I've got the portfolio calculator right here, so you can download what I'm looking at. The Excel spreadsheet that I'm looking at right now, you can download it there. But before you go there and download it, don't go there yet. Go to this page right here too. I want you to notice that these two links are the two links you need to keep track of. They're on my site under portfolios, the 9-system portfolio and the portfolio calculator. I'll put this recording here at the top of this page probably tomorrow once I get it processed. You can download all the performance summaries going back 3 years. If you want more history, you can see the results in the calculator for each individual system. Or you can request them. I can send them to you as well if you need that. Here's just a screenshot of the workspace. I've got a description of each one. You can see the inputs, and then here we have the results. This is as of the 5th. The one we're looking at is as of the 6th, and the screenshot is as of the 5th of March. And for this webinar special, what I'm going to have through Sunday is on a monthly basis. If you sign up on a monthly basis, you're enabled for 4 contracts. The results that you see here that we've gone over are just on a per contract basis. And so the monthly subscription is $400 per month for one. But if you have the capital and you want to trade more contracts, you definitely get more value because you can get up to 4 contracts through Monday. On the annual subscription, and I encourage you to be a long-term trader at this, and to commit long-term versus just trading in and out on a monthly basis based on how you feel. Because just based on what I've seen in these drawdown curves and the way people act, they usually get out at the wrong place and get in. Usually get in on the run-ups and get out on the drawdowns. It's not bad to get in on a run-up as long as you're committed too. So if you know a drawdown is going to come, not to emotionally get in on a run-up, but if you just commit to trading any system, mine or anyone that you develop that you have confidence in, or anyone else's, or in the market in general, it's best to commit long-term to something rather than to jump in and out. I just don't. There's not much success in jumping in and out of anything that I've seen. So the opportunity for an annual subscription for this webinar special is less. Normally this price is 75% of what the monthly subscription would be. So if you did that for a year, that would be $4,800, and this is like 75% of that price. And then for this special, it's even lower. And so it also includes 4 contracts instead of just 2. And this special is good through Sunday. Be sure to look at all this information and read it and understand it. And let me know if you have any questions. This special's through Sunday. This is another thing, ugly equity curves in the $1 million portfolio, something I did in the past, and it shows how here's the E-mini S&P systems in the portfolio. They're not the best looking E-mini S&P systems. They're ugly, but they're diverse, and they trade different ways in different markets. And then here's the combined equity curve of those 4 systems. It's not perfect, but it's a little bit better than each one of those individually. And so this is what you get when you combine trading systems that work differently. You get that diversity. And again, this is hypothetical. These are all hypothetical results based on years of research. This is a $1 million portfolio. That's something else you can look at if you're interested in. But this is what we're focused on today, is this 9-system portfolio. So that's all. Some more questions. NinjaTrader, this is available in TradeStation. It's available in MultiCharts. And 7 of these 9 systems are available in NinjaTrader. Still working on that. It takes me a little bit longer. C# is a little bit more challenging than Easy Language. I've done TradeStation programming for 17 years in NinjaTrader for the last 2, and I'm not naturally a programmer. I'm just learning it. So I usually get programmers to help me out. So I don't have it all 9 systems in NinjaTrader yet. Keep in mind the results can be slightly different because we use market internals like the tick, the advancers, and decliners. I want to show you a link for that. Under tick count trend. Not that link. Under this link right here, I believe, under the tick count trend trading system, this video shows a real-time analysis and explanation between different platforms for the NYSE tick. So you want to also note this link. It's under trading systems, tick count trend, and it shows you a video of the New York Stock Exchange tick and different platforms. And I didn't know this until the past year or so, but different platforms calculate the NYSE tick based on their data feed of all NYSE symbols. It's not a symbol that comes from the NYSE. So if you're looking at the NYSE tick or the advancers or decliners, Kinetic, IQ data feed, TradeStation may all have slightly different numbers, and because of that, now the futures aren't different, but the market internals like NYSE tick advancers and decliners might be. So that's why. That's 4 contracts per system, per instrument. So the limitations for these strategies are based on you've got 9 systems, and typically you're enabled for 2 contracts per system, so 18 contracts total. And then the special is 4 contracts per system, and there's 4 ES systems, so that'd be up to 16 contracts on the ES. Not sure what that beep is. I got an Amber Alert on my phone. It makes that beep. Anyways, so does that answer your question on the contracts? Or does that answer everyone's question on any of these questions or systems? I appreciate the questions. They're good questions. So if you have any, just ask them here now, or you can email me. If you don't like to ask it in chat or in the webinar live, you can email me those, or feel free to ask another question here. We're about to wrap this up. Gone over an hour. My throat's hurting. I'm not used to talking this much. These are all the inputs. I put those up there so you can see them. And again, these times are in Eastern Standard Time. So if you're in a different time zone, you'll need to adjust your time-based inputs. Start time, finish time, exit time. I'm in Central Standard Time, but I keep my computers on Eastern Standard Time. So you can do that, or if you are on Central Standard Time, for example, for crude oil, you'd set your start time at 7:35. Your finish time would be 14:05. Your exit time would be 14:10. These are for Tradestation, MultiCharts, and 7 of the 9 are in NinjaTrader. The NinjaTrader systems that are not included, that I have not been able to convert yet, shouldn't be too much harder, is Eurogap Fill and SR Counter Trend Crude Oil. It's slightly different than the E-mini S&P version because it does not use market internals. Another thing you can also do is, if you haven't signed up for the Daily Trading Systems email, you'll get this free indicator. You get this indicator. It just draws the support and resistance lines. There's some follow-up emails that explain to you what happens if you take every trade on those support and resistance lines versus selectively taking those trades. So if you haven't signed up for the daily emails, do that and you can get that set of emails. So I believe that's it. I believe that's all the questions that I see. Data feeds, you need to make sure you have the New York Stock Exchange. You need to make sure that you have the VIX, the CBOE VIX for Cobra CT. So for this one, you need the VIX CBOE Volatility Index. I think that's $1 or $2 a month. They're free. The tick is on the NYSE, and advancers and decliners on the NYSE. That's $1 or $2 a month, and you can get. I know on Tradestation, all the markets here, futures markets here on the CME group, and you can get that for $20 a month. If you have a futures account, it's only $20 a month for the CME group, and includes all these markets. So the whole price of all your data should be about $23 a month, I believe, for all these markets. Something else to consider. And yes, you get all the systems. You get all the systems for $400 a month for up to four contracts. Enable it for 4 contracts. And these these aren't high frequency, they're low frequency strategies. So you may not trade on some days. So if you're the kind of trader that's looking to, this is what I struggle with. This is not naturally my style. My style would be to scalp and to trade a lot. And so I seek and I try to find strategies that scalp and trade a lot because that's my personality. I like activity, I like action, but it's hard to find strategies that trade a lot and make money and overcome the transaction cost. And so you have to learn to sit back. You have to learn to do other things like research. That's what I do a lot during the market. You might have one computer on automation and one computer doing research or writing or publishing or whatever else you do. I do writing and publishing obviously for my website. That keeps me busy. It keeps me from overriding my systems. It keeps me from wanting to trade more. If I focus too much on the markets and I look for a discretionary trade, I might trade too much, and so I have to do other things like what I'm doing now. So that's all that we have here. So for now, so I'm going to stop the recording, and I'll be available on email, david@capstonetradingsystems.com. If you don't, I don't know how to send that out to everyone, but you can go to my website and go to Contact Us, and you can click there to email me. And so, or you can fill out this form. You can fill out this form if you want, or you can click here, either one. So that's it. Thank you for coming, and thank you for the good questions. And look forward to talking and answering any more questions you have on email. And I'll have this recording up soon. So everyone have a good day. Thank you.